I do think earnings numbers will still come down quite a bit. And whether we end up with a recession or not, I think there's a good chance that markets will price that probability as being higher than they have done as yet.
Goldman Sachs Chief Global Equity Strategist Peter Oppenheimer there. Let's now bring in our next guest who says market sentiment has become too negative. With us now is Shana Sissel, President of Banríon Capital Management. Shana, good to have you with us. So could we see a positive earnings surprise, and how meaningful would that be for the markets?
I think the likelihood that any surprise will be more likely to be positive is higher. I just want to be clear. I think earnings estimates have come down. I think there's been a lot of negative warnings by companies, a lot of negative guidance after Q1 reports. And so many people are expecting the worst. But I actually think that it's more likely than not that companies sort of use that opportunity to warn, but also get their act together, if you will, in order to prepare themselves for Q2. So I just think that there's overly negative sentiment. We have, the highest level of shorts of S&P 500 futures that we've seen in quite some time. I think it's over 10% short S&P futures. And I think we've gotten overdone with the negative sentiment at this point.
If we get a surprise, say, acceleration of the inflation numbers tomorrow, what sort of reaction could we get from the markets?
I think that if it's slightly higher than expected, the markets will react negatively, but not necessarily with the same negativity that they did last quarter. I also think that if it's in line or even a little bit better than expected, that will be something that will actually drive the markets upwards. I think everybody's expecting bad inflation numbers, but there's some signs here that inflation is starting to ease in the commodity markets. And you're starting to see that and crude oil prices have come down. Some of the big commodities have come down. So I think there's reason to believe that any sort of earnings announcements will include guidance that will give us better outlook on how future inflation is impacting these companies in real time. And I think that the market in general will react positively if the number is in line or less than expected. But if it's more than expected, I don't think the market's going to freak out, because I think that there's sort of already that negativity out there.
When you take a look at the components of CPI, is there anything that you're watching for that could kind of meaningfully inform investment strategy?
The only component that I'm keeping an eye on has to do with cost of housing, apartments, owner's equivalent rent, those types of inputs. I think the impact of rising rates, especially in the last quarter, has impacted the housing market negatively. And I'd be interested to see what that looks like, how much of that comes through. But that's really the only part of the CPI components that I'm paying special attention to.
The moves when it comes to FX, the relentless strength of King dollar, particularly as we saw brief parity for euro dollar, how does that have any impact at all in terms of how you're investing at the moment?
At the moment, it doesn't have a huge impact. It does somewhat affect how willing I am to take currency risk without a hedge in any sort of international equity allocation. But it doesn't impact that much what I'm doing. These are normal moves in FX. While we are at extremes, you really only have to worry about it if you are investing in that currency.
Shana, always great to have you with us. Shana Sissel, Banríon Capital Management President. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can get that at Daybreak Go. You can customize those settings so you just get the news on the industries.